Today we're diving into a topic that's been buzzing around the crypto community for a while now, the Pi network, and its so-called global consensus value. You might have heard the staggering figure of $314,159 per Pi being thrown around. But what does it really mean? And more importantly, is it even realistic? Today we're diving into the Pi network and the infamous global consensus value, $314,159 per Pi. This number, inspired by the digits of Pi, has fueled wild dreams of instant wealth. People are getting excited, thinking they've hit the jackpot just by mining Pi on their phones. But let's take a step back and look at the bigger picture. But let's be real, that valuation is pure fantasy. It's not official, not endorsed by the Pi core team. If Pi were worth that much, its market cap would eclipse the global economy. Completely unrealistic. The Pi core team has made it clear that this number is not something they support or promote. Believing in this myth only sets you up for disappointment. The GCV hype is powerful, but it's just that, hype. Millions have joined Pi, hoping for a windfall, but hope isn't a strategy. Real value comes from real utility, not community-driven wishful thinking. The GCV didn't come from the Pi core team. It's a community invention. It's a social experiment. If enough people agree on a price, maybe it sticks. But the core team has never endorsed or even acknowledged the GCV. Officially, Pi's value will be set by the open market when it's tradable. The GCV is just a fantasy, not reality. New users see the GCV and think it's guaranteed, which is misleading. This split between dreamers and realists hurts Pi's credibility. For Pi to succeed, the focus must shift to real utility, not imaginary prices. The core team needs to address the myth and guide the community toward building actual value. What are called Pi IOUs. These are speculative tokens that claim to represent future Pi coins. And they're being traded by people who are betting on what Pi might be worth someday. Right now, these IOUs are trading for about 26 cents each, not the $314,159 figure you might see in viral social media posts or hyped-up YouTube videos. That's a massive difference, and it's a reality check for anyone who's been swept up in the excitement. The total market cap for these Pi IOUs is around $185 billion. While that might sound impressive at first glance, it's nowhere near the astronomical numbers being thrown around by GCV supporters. In fact, it's a fraction of what some people are hoping for. What's really telling is the behavior of the people trading these IOUs. Instead of holding onto their tokens and waiting for a moonshot, many are choosing to sell right now, even if it means cashing out for just a few cents. This shows that real market sentiment is much more cautious than the hype would suggest. It's important to note that the Pi core team does not endorse these IOUs. In fact, they've issued multiple warnings about the risks involved, reminding users that these tokens are not official and could be worthless if the mainnet never opens or if the project fails to deliver. Still, for now, the IOU price is the closest thing we have to a real-world valuation of Pi. It's not perfect, and it's definitely not official. But it does reflect what people are actually willing to pay for the chance to own Pi in the future. The gap between 26 cents and the GCV fantasy is huge. It's a stark reminder that market reality and online dreams are often worlds apart. No matter how convincing the hype, the numbers don't lie. This is the difference between hype and actual market value. Social media can make anything look like the next big thing, but when you look at what people are really paying, the story changes. Many traders are choosing to cash out for pennies rather than wait for a miracle that may never come. This tells you a lot about what the market actually believes about Pi's future. So, instead of getting lost in fantasies or viral price predictions, pay attention to what the market is actually doing. The real story is in the numbers, not the hype. The current IOU price is a powerful lesson in separating dreams from reality. It's a reminder to stay grounded and make decisions based on facts, not wishful thinking. Don't get caught up in wishful thinking or viral hype. Focus on what's real, and always do your own research before making any financial moves. Despite the noise, the Pi core team is making real progress. They've updated their protocol to align with Stellar Core, boosting security and performance. An AI-based KYC system is rolling out, aiming to clear the backlog and get more users verified. New Node software for Linux encourages decentralization and network security. These aren't flashy headlines, but they're crucial for Pi's future. Real development is happening, slowly but surely. Ignore the hype. Pay attention to these tangible updates. This is where Pi's real potential lies. Progress is measured in tech, not rumors. Smart contracts are Pi's real game changer. They enable decentralized apps, DApps, that give Pi actual utility. Without dApps, Pi is just another speculative token. The core team is pushing for a strong dApp ecosystem before open trading. Imagine using Pi for games, DeFi, or tipping creators, all within the network. The future value of Pi depends on real-world use, not hype. Hackathons and developer initiatives are already producing early dApps. Building utility first is a smart long-term strategy. Smart contracts are the engine for Pi's future. Watch the ecosystem, not the price predictions. You can't sell Pi on Binance or Coinbase yet. Period. Pi is in the enclosed mainnet phase, a walled garden. You can send Pi to other verified users and use it in approved apps, but not trade it externally. The firewall keeps Pi isolated from the broader crypto world. This phase lets the ecosystem mature and KYC progress. The core team is taking a slow, deliberate approach. No rush to open trading. So, what's the verdict on Pi Network as we look ahead to late 2025? After years of anticipation, speculation, and debate, it's clear that Pi has sparked a global conversation about the future of digital currency and community-driven projects. It's not a scam, but it's also not a magic ticket to instant wealth. Pi Network sits in a unique space, neither a get-rich-quick scheme nor a guaranteed success. It's a project that's still evolving, and its true potential is yet to be fully realized. The reality is somewhere in the middle. Pi is a long-term experiment facing real challenges like regulatory hurdles, technological development, and building trust within its community. It's a journey that requires both patience and a willingness to adapt as the landscape changes. The market is divided. Some people are selling their Pi for pennies, eager to cash out, while others are holding on, hopeful for a brighter future. The best strategy right now? Patience and a realistic outlook. Engage with the project if you're interested. Complete your KYC verification, explore the growing ecosystem of decentralized apps, and stay curious. But above all, manage your expectations and don't invest more time or energy than you can afford to lose. Think of your Pi as a lottery ticket, something that could pay off but probably won't change your life overnight. It's a fun experiment, not a retirement plan. Protect yourself from misinformation and rumors. Only trust updates from official Pi Network channels, and be wary of anyone promising guaranteed profits or secret shortcuts. Ignore the hype and noise from YouTube, Telegram, or X. There's a lot of speculation out there but very few facts. Remember, Pi's journey is a marathon, not a sprint. The real story will unfold over years, not days or weeks. Real value will only come if the community and developers can build a useful, thriving ecosystem that solves real problems and attracts real users. So, stay patient, stay informed, and keep an open mind. Watch how the project develops, and be ready to adapt your strategy as new information emerges. In the end, that's the only winning move: thoughtful engagement, realistic expectations, and a willingness to learn as you go.